I won't stop till I hear him say, Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel, guys and gals. Don't forget, when we reach 10,000 YouTube subscribers, we are going to do a 100 XRP giveaway along with a CYPRX hat and t-shirt to 2 lucky YouTube subscribers. So we really do appreciate the love and the support. In today's video breakdown, we are going to be covering some very interesting market manipulation. I've shown you guys here on this YouTube channel time and time again that you should not be paying attention to these YouTube articles, fundamentals, anything that you read on the internet to base a bias on what you should be doing in this market. Guys, I show you all multiple fundamental articles where we see a massive indecision and indecisiveness in multiple traders across the boards, technical analysis bias. So this leads me to this tweet right here that I posted to you guys a couple days ago. The up and down emotions of every single influencer right now should confirm they are paying attention to the wrong thing. Your goal in trading should be to focus on current price information. No one knows the future. Stop trying to guess whether the bottom is in or not. Okay. Now, 90% of individuals won't do this. Again, that is why 90% of individuals fall into that statistic of the people that lose money in this market. It is because they are constantly worried about what someone else is doing in this market. Towards the end of this video, I'm going to show you guys how you could have utilized some of the CYPRX methodologies to capitalize on buy scenarios. Now, you can utilize the CYPRX methodologies on buy and sell scenarios for any kind of cryptocurrency asset. What we're doing in the market for students here and what we're trying and attempting to do for you guys on YouTube as well is get you to understand why the markets are doing what it is that they're doing. You have to remember a couple of different things, that the markets move based off of psychological levels in the form of buying and selling from premium and discount, and they move in tandem with where liquidity sits and rests in the market. Banking institutions are liquidity hunters, and you as a retail trader are a liquidity provider. When you can understand those few simplistic things, you can start to mature and really develop a sound strategy in this market, especially if you're not focused on retail methodologies and you seek to trade against those retail methodologies. So before we dive into that technical analysis breakdown, where I'm going to give you a fully diluted breakdown on what you should be looking for in the market from our personal perspective here at CYPRX, again, that is not financial advice. This is just what we teach our students, or at least scratching the surface of what we teach our students, right? Not giving you guys the fully diluted breakdowns, but just kind of dropping gems for you here and there. But before we do that, I want to take your attention over to these hilarious articles. Watching the bulls and the bears fight it out in these fundamentals is literally hilarious. Guys and gals, please wake up, mature in your trading, and do not let these fundamentals, do not let what people post on Twitter, and do not let what these YouTube enthusiasts that draw Fibonacci sequences on their charts influence what you think is going to happen in the market. Create a sound strategy or join a mentorship program with a strategy that has proven success in the market, and then go from there. Back test the strategy, forward test the strategy, and then apply it yourself. Keep calm, keep collective, and stay in your own lane. Do not worry about what other people are doing, because that will drive your account to zero, okay? So just showing you guys again time and time over and over that these fundamentals have no idea what they're talking about, that everybody's always in a bullish and bearish battle. Look at these articles right here that I highlighted for you guys on the Daily Huddle. The Daily Huddle is one of my most favorite manipulated market fundamentals, right? FX Street, the Daily Huddle, You Today, finance feeds, all of these fundamentals that people on YouTube start to read to you guys. I think it's literally hilarious that they find these enthusiasts off of Twitter to make articles about. But check this out. Ethereum bottom finally in. Fidelity's macro analysis says price of Bitcoin BTC offers a clue. Now, I want to take your attention over here. An article posted right before that literally states, analysts who called Bitcoin and crypto meltdown says there will be no mercy for traders turning euphoric in the market. The strategist who predicted this year's Bitcoin collapse below 30,000 says the crypto market latest bounce will likely be short-lived. Blah, 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 blah. The meat of this article, he's talking about bearish targets and things of that nature, a 50% devaluation. But down here is where it was interesting to correlate this with the previous article. DXY going parabolic, Bitcoin going up a bit, and people getting euphoric and calling for $40,000. Not a single bullish sign to support this move up. So one article saying not a single bullish sign to support this move up, and then we have another article over here, right? The one that I just read to you guys saying offers a clue. So one analyst and crypto enthusiast is saying that there is clues in the market that the bottom is in. And then there's another analyst right over here that the Daily Huddle utilizes to write an article on that says that there's not one single bullish sign to support this move up. I just think it's hilarious because the Daily Huddle literally contradicts itself. What side are you on, and what are you trying to portray to retail investors that are reading this trash? Okay, you are confusing people. So when I see this in the market, this is a golden opportunity for you to capitalize on learning how to trade these markets profitably by trading a strategy that shows consistency in this market time and time again. Remember, nobody in this market can be accurate 100% of the time, but as retail traders, what we can attempt to do is create a strategy for ourselves that gives us a higher probability for a trade to go in our favor. And that is what we've done for the CYPRX students. That is what we attempt to do for you guys on YouTube. We teach you a strategy that plays out 90% of the time in the market, because why? We trade in tandem with what the bank and institutions are doing. After the market makers have hunted liquidity, we wait for a sign of a bullish or bearish reversal depending on what type of bias we are creating for that day, and then we attempt to move in tandem with that momentum, right? And I'm going to go over that via technical analysis here with you guys in just a second. But just to show you guys another manipulation market fundamental, right here we see an article: rallies incoming for Bitcoin, Ethereum, and one of ETH's top rivals. This is Ethereum, according to analyst Michael Vanderpope. Now we see them contradict Michael Vanderpope a lot here on this fundamental space, dailyhuddle.com. Here are his targets. So we go down here, and he's talking about Bitcoin potentially rallying to $28,000, so on and so forth. A popular crypto strategist is predicting rallies in the coming weeks for a trio of digital assets, including Bitcoin, Ethereum, and Phantom. And he tells his 615,000 Twitter followers that he's bullish on BTC. Cool, right? So again, we see the Daily Huddle pulling a market analysis from someone who has the hype on Twitter, right? The follower count. And again, it's just causing chaos in the market amongst retail traders who are reading these fundamentals. Okay, now we come over here to this one, and it says Kevin O'Leary warns massive crypto panic event incoming, predicts much of industry will be wiped out. So we see another billionaire right over here giving another bearish prediction. So yet again, the Daily Huddle contradicting itself: bullish, bearish, bullish, bearish, bullish, bearish. When I see these fundamentals in the market, I just capitalize on them, and I say to myself, you know what, I'm going to stick to my guns, I'm going to stick to what I know in the market, and I'm going to consistently stay in my own lane, make my own trading decisions, and mature enough in my market approach to not let anybody else's outside biases contradict what I'm doing in the market. And I highly suggest that you guys listen to what I'm saying and do that for yourselves. Do not listen to what anybody else says in this market. Create your own bias, create your own market strategy. If you're not going to come into a mentorship program that shows you consistency on the internet, which we've done here at the CYPRX YouTube, then you need to get it together, guys and gals. Do not be basing your trades off of what people post on Twitter. Do not be basing your trades off of the fundamentals that you read on the internet, and promise yourself, please, that you're not going to place trades based off of some freaking guy that posts some bullish thumbnail with his mouth open on YouTube that gives you some Fibonacci extension telling you that XRP is going to go to $100 in 6 months. Okay, that is going to get your crypto account wiped out. That is going to get your portfolio just completely sucked dry. Don't do it. Save yourself. Okay, you guys can go on the Daily Huddle and sift through these articles. Honestly, I've had enough. I just thought that I'd show you guys this information, spreading cryptocurrency awareness, really trying to wake people up and show you that the fundamental space, the YouTube space, and the Twitter space really don't have it out for the retail investor. Yet ask yourself, how come 90% of individuals go to these fundamentals, the Twitter space and the YouTube space, for their information? It is because people don't want to pay for an advanced level of knowledge to approach the markets with. They want to get free stuff, and I'm telling you right now, the free stuff on the internet, YouTube, Twitter, and these fundamentals will literally bleed you dry. So let me come over here and drop some gems for you guys via technical analysis, just to show you guys time and time again surrounding what we teach here at CYPRX you could have capitalized on since July 4th. Okay, again, what we're looking for in the market here at CYPRX, it doesn't matter regardless if you're looking for sell positions or buy positions. Remember, the markets move as above, so below. It does the same thing to the upside as it does to the downside. We're looking for the market makers to show us a willingness to sweep liquidity from a low if we are bullish in the market or we're looking for buys. We are looking for the market makers to show us a sign to forcefully push the market down into an area of liquidity. Now, that area of liquidity can rest in a couple of different ways. It can look something like this. So I drew a couple of different patterns out for you guys, because remember, the market and the way that the market moves is not going to be the same every single day. that would be impossible, because that would consist of every single market participant the day prior to be involved in the same exact way with the same exact position open, and that is just merely impossible, right? The odds of that happening are literally, I mean, I can't even give you the statistic because it's just non-existent, right? But what we're looking for is a consistent market maker pattern, understanding that the market makers are the only people with the amount of money to forcefully push their way into an area of liquidity and reverse the market in their favor. We as retail traders do not have the amount of money in our accounts. It doesn't matter. Even if every single retail trader took the same exact trade, we still would not have the amount of money to move the market this way. So when we see this type of pattern, regardless in what shape or form it comes in, we know that retail traders are not behind it, and that bank and institutionalized traders are 99% of the time the ones behind the move. And that market move looks like this, where we see an area of liquidity, a forceful push down into that area of liquidity. We could see something like this, where we see a double bottom formation in the form of retail support to the left hand side and a forceful push below that. We could even see trendline liquidity. Here's another example, right, where we see trendline liquidity or retail traders buying at these lows, and we see a market forceful push down into that area. Okay, once we see that happen, what's the next thing that we're trying to identify here at CYPRX before we seek to enter into a trade? We're looking for a rejection of a psychological level and a run on that liquidity. So you can look over to the right hand side. That's what these numbers over here to the right hand side of your trading view are for. Okay, they're to identify psychological levels. Well, if we're trading Bitcoin against the United States dollar, we're looking for it to respect the quarter theory. So we're looking for 0 zeros, 25s, 50s, 75s, and 0 zeros, right? Once we see a market manipulation move away from a psychological level in a bullish reversal, we need to see the market break previous structure. This is an identification to us that the bulls have now overcome the bears or the sellers, and that the previous push down into the area of liquidity was a market manipulation move to grab any early over leveraged buyers or people that have sell stops beneath these lows, activating an area of liquidity, right? So same thing down here for this example. We see a forceful bully push down into an area of liquidity and a market rejection that leads to a market break in structure. Same thing here with this example. Doesn't matter what you're looking for, regardless if it's trendline liquidity, double bottoms, or just a significant low to be taken out. This is what we're looking for to happen in the market before we react to price action. So same thing here. We see the market forcefully push down into these lows or into these trendline liquidity lows, and we see a market reversal that leads to a market break in structure. Once these three things happen, we see liquidity, we see a market forceful push down to that liquidity, rejection of psychological level that leads to a break in structure. We can then say to ourselves, at some future point in price action, the market is most likely going to pull back into discount, so that way the bank and institutions can add to their order. We know from the information that I've taught you guys and the information that I give to the CYPRX students that bank and institutionalized traders cannot just take and place one position. If they are going to buy price action, they are going to add to their order multiple times. So as retail investors, we can seek to get in on those additions to their original order, right? So we're looking for price to come down below 50% of their original purchase area, right? So if this is where the bank and institutions manipulated price to give themselves discount, we are seeking for price to come down into 50% discount of this bullish leg. Well, guess what? TradingView has a tool called the Fibonacci retracement tool that you can utilize to give yourself a visual as to where that potential discount is going to be. And I've told you guys multiple times, the bank and institutions like to purchase and add to their orders anywhere beneath 50% discount, roughly at around 62 to 79 to 100% discount. What does that do for us as retail investors? That allows us to get in on the moving train, to minimize our risk and maximize our reward, right? That is our goal, again, as investors, is to minimize our exposure to this market and maximize the return on our initial investment. So same thing here. You see how this bullish leg broke the previous market structure? We can expect for the market to pull back into discount so the bank and institutions can add to their order. Once the market starts to pull back at least 25%, that is a green light for you to take your Fibonacci tool and draw it from the low to the high that broke market structure, extend that over, and try and attempt to move in tandem with the bank and institutions that are clearly grabbing lows and making new highs. You're looking to get in at 62 to 100% discount to, again, minimize your risk and maximize your exposure. Now your stop loss, we can go over that in another YouTube video. I have that drawn on for you guys. You want your stop loss to, logically speaking, again, trading logic in this market, to be beneath the low that swept liquidity. Why? Because we know that if the market reverses and plunges beneath this low, that the market is not in an uptrend. That minimizes our risk, again, because we would get stopped out of the market if this market structure breaks, and that would confirm to us that the market is not ready to buy off yet. It is not ready to go parabolic. It is not ready to go to the upside. Okay, so we're saving our capital by creating a stop loss in the market and making sure that if this level is broken to the downside, that we get taken out of the market because the market was not ready to buy off yet, right? So that's why I have that stop loss on there for you guys, right? Your stop loss needs to go beneath the low that swept liquidity. Same thing here. It doesn't matter what scenario you're looking at. You're looking for the market to sweep a low, break previous market structure. Once that pattern has played out, you know that that is a market maker pattern, because the market makers are the only people with the amount of money to manipulate the market that way by giving themselves discount, then taking buys from discounted price and moving price higher, then adding to their orders. Same thing here. After the market breaks a previous structure high, you're looking to take your Fibonacci tool, which is a tool to gauge discounted price in the form of premium or discount, and you're taking it from the low to the high and extending that over to the right hand side and attempting to open a position to where the bank and institutions are going to add a secondary order, right? So now that I've given you guys a little price action breakdown, I want to show you guys how just utilizing these methodologies. It's called the set sweep go method. Okay, this is what we teach in detail to our CYPRX students, and I've shown you guys on this YouTube channel how it plays out time and time again. Now this is just a rough breakdown, me drawing on the charts just to show you guys how you could have paid attention to the sweep of liquidity, the market reversal, and the higher low after the sweep of liquidity, looking for a potential entry. Okay, how many times this same scenario plays out. So remember what I said in the beginning of this video. Your approach to this market should be to approach it with a strategy that gives you a higher probability that a trade is going to go in your favor. Nothing is guaranteed in this market. Here at CYPRX, we know that, and we have confirmed that in our strategy, because sometimes we have trading days where this does not play out. Now remember, this is just scratching the surface on the information that I give to the CYPRX students. This is what I give you guys for free on YouTube. If you really want to take it upon yourself to educate yourself properly, you need to join a mentorship program. That is something that I highly advise. Now, I'm not sitting here saying that ours is the best, but compared to other ones that charge you thousands of dollars for the amount of information that we give to the students, I say that the amount that we charge is very undervalued compared to what information and value we give to our students. If you are seeking to become a professional trader, or seeking to do this part-time, or seeking to really advance in your trading career, and you're losing money consistently, it is most likely because you're reading tweets. It is most likely because you're watching YouTubers that draw Fibonacci sequences. It is most likely because you're reading fundamentals that confuse the crap out of you, that tell you tomorrow's bullish and then the next day's bearish, right? Create a sound trading plan and approach that trading plan over a long period of time, a trading plan that shows you consistency time and time again in the market. Well, here's that strategy right here. Again, the set sweep go method. Okay, so here we see a low, right? We see the market sweep that low. Well, now that we've seen the market set a low, sweep that low, what are we doing, guys and gals, based off of what I just taught you? We are waiting for the market to show us a bullish sign of reversal. We'll look at this right here. Here's a bearish dump. Here's a bullish match of momentum. Here is a higher low after the market matched momentum, after the market swept liquidity from a low. Here is a minimum risk, maximum reward trade. Boom, right there. Stop loss beneath the low where the market swept liquidity, and an entry at a higher low after the sweep of liquidity. That's one example from July 4th on to today's price action. Look at this. Here's another example, and just to pay attention, most of these happen during London and New York session, which here at CYPRX, we teach you guys to attempt to trade London and New York session. I'm not going to get into the specifics surrounding why we teach our students that, but just to give you guys a little gem, 90% of these trades happen during London and New York session. Okay, so check this out. Here's a low right here. Here's a sweep of that low. Here's a rejection of a psychological level, the 19,300 psychological level. Boom, right there. Let me just round this off for you guys. Okay, once you see the market reject the psychological level after sweeping the low, what's the next thing that we're paying attention to? A bullish match of momentum. Well, would you look at that? We see a bearish leg from a lower high to a lower high, sweep the low. This whole bullish leg matches this entire bearish momentum right here. And then what's created after that? A higher low after the sweep of liquidity. There's your entry, there's your stop loss at the sweep of liquidity, and boom, what happens? a massive rally to the upside to come and attack. Would you look at that? Another retail pattern in the form of a double top formation right here to the left hand side, where we can see over leveraged traders in the form of sellers trading M formations and retail methodologies got tapped out when the market came and attacked those highs right here in this area. Okay, so that is now day 2, showing you guys that this pattern plays out time and time again in the market. It doesn't matter which way you look at it. This is on the 10-minute chart. We can see that the market makers are sweeping lows, making new structure highs. We're seeking to get in at a higher low after that price action has played out. Look at this right here. Here's a low, and remember, it plays out in different scenarios every single time. Every single low that gets swept is different from the low that gets swept or the liquidity that gets swept the day before or the day prior. So here's a low, the market sweeps that low. We see the market reject the psychological level, match with bullish momentum, create a new high in comparison to the previous one. So this high right here, okay, is higher than the previous high right here. So we can identify this as a either match of bullish momentum or a break in market structure, okay, where we can see that this whole entire market structure right here was broken by this high. Okay, now what are we doing, guys and gals? According to the steps that I've taught you, we have the sweep of liquidity. We have the market break in structure. We're waiting for the market to pull back at least what? 50% to 62 to 79% discount, taking your fib from the low to the high and extending that over. Look at that. Another entry. This is now day 3. You could have utilized these simple methodologies, the set sweep go method, to attack Bitcoin price action or build a crypto portfolio, taking partials, protecting your capital by moving your stop loss to break even, pulling profit, right? All of those things come into play as well. It's not as easy as 1, 2, 3. There's other things that come into play. What I'm attempting to do is just showing you guys how this plays out in the market time and time again. So here's another low. Here's a sweep of that low. Here's a bullish match of momentum that does what, guys and gals? It breaks previous market structure highs. So here's a sweep of a low, shift in market momentum, rejection of a psychological level that leads to a new high, market break in structure. You're doing what? Taking your Fibonacci tool, engaging where future price discount is going to most likely be at. And would you look at that? 62 to 70% discount. Banking institutions, again, like to buy at those discounted prices. And we see a market rally and explosion to the upside on Bitcoin. But just to show you guys that the devil's in the details, before this massive rally took place on Bitcoin, what had to play out? What had to play out, guys and gals? If you don't believe that this strategy is extremely, extremely accurate, look at what had to play out before this nasty rally on Bitcoin had to happen. The exact pattern that I'm trying and attempting to teach you guys multiple times on this YouTube channel had to play out. It is because the banking institutions will not buy unless price is at discount. Once they've manipulated price into discount, then they will execute their trades, okay? So this is now day 4 on Bitcoin that you could have utilized the same methodology, taking partials, moving your stops to break even, again, minimizing your risk, maximizing your reward. So here's a London session low right here. We see a sweep of that low during New York session. We see the market shift momentum. It's a very fractal shift of momentum, but we can see that these bearish candlesticks, again, if they were real bearish engulfing candlesticks, what would take place? The momentum to the downside would have continued. We would see lower lows, lower highs, lower lows, lower highs. We never got that type of price action. This is a market sweep of liquidity, rejection of a psychological level, match of bullish momentum. You can see that this little tiny fractal candlestick high right here, if I zoom in, this little fractal candlestick high took out this candlestick. If I was to go down to the lower time frame, this is a fractal market break in structure. Okay, so I'll go down to the 5-minute chart just to show you how lethal this is. We can see a lower high here. This is a higher high in comparison to the previous one. So taking your Fibonacci extension after the sweep of the low, from the low to the high and extending that over. Again, I've told you guys multiple times, the banking institutions will manipulate price back down into 62%, all the way down into 100% discount to add into their initial order. If we pay attention where the candlestick bodies close, the candlestick bodies on this low right here never break and close beneath the previous market structure low. This is a higher low in comparison to the previous one, which was a sweep of liquidity from the low to the left-hand side. Boom. This is now day 5 where this same exact set sweep go methodology has played out right in front of you guys. So if you're a non-sayer, a non-believer, anybody that says that backtracking on price action and doing back testing and blah, 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 hindsight testing is garbage, okay, cool. You stay in your lane and you be the type of individual that continuously reads news fundamentals and takes their trades based off of Twitter biases and Fibonacci extension biases, okay? Here at CYPRX, we're going to constantly give value to our students by showing them what the market makers are up to in extreme detail. If you guys want that strategy, over 60 hours of course material, the link is in the description down below. We would love to have you on board. From that example that I just covered right there was one more, so that was 6 days worth of price action that you could have utilized the same methodology that I just taught you all over and over and over and over again to capitalize on moves on Bitcoin. Now remember, there's a couple of other things that you need to take into consideration in the form of where you're going to take profit, where your stop loss is actually going to be at, how to enter into the market, whether you're using market execution, buy stops, or limit orders, and so on and so forth, okay? It's not just as easy as 1, 2, 3. This CYPRX video breakdown was solely just me trying to show you all that a realistic and mature approach to this market with a sound strategy can really help you grow a portfolio. It is not just about hitting buy or sell. It is not just about reading fundamentals and being bullish or bearish. Stop letting these market fundamentals and these market enthusiasts manipulate you into buying and selling price action. Approach these markets with a mature perspective, and 90% of the time you will come out on top. Blessings to you guys all. Make sure that you guys are subscribed to the YouTube channel. This YouTube page is growing. We really do appreciate all the love and the support that everybody gives us. Make sure that you're not falling victim to any spam in the comments down below. We do not have a WhatsApp. We do not have a Telegram. Only group chat that the CYPRX community has is a private Discord, and the only way to access that is to receive a personalized email from the customer support team after you enroll in the CYPRX course material. As always, I will see you guys in the next YouTube video breakdown. Be cognizant, be aware, and please, please, please be safe out there. You guys have a good rest of your week.
I won't stop till I make a change. I withdraw on the things I make. I turn flaws into flawless traits. I build tall, never capped in space. I won't stop till I hear him say, oh, oh, la, 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 la.